All right, let's get going. Good morning. And let's see what is in store for us as to how things are set up here. Good morning. Good morning. So things played out yesterday pretty much according to the game plan for the most part. There's a few little wiggles along the way. I'll tell you that the most difficult part of yesterday for me was like that first half hour as I saw the buyers coming in and starting to take hold and thinking, it's just not there yet, as to the things that I wanted to see. And the worst case, what would have happened would have been a stop out and then would have had to re-enter. But anyway, I was really happy with the way things set up yesterday, and then actually what I was able to take advantage of and the move up and the management of it. So look, no matter how long you've been doing this, there are days that you might be off a little bit or things just are kind of wacko, so you look for the setups that you always do. You always look for your interpretation of the price action, as you always do when you look at your multiple time frames. That's the method, and the method doesn't change. It's the environment that changes, that kind of throws things out of whack a little bit. And when we talk about this discipline and patience part, it's really about having the discipline and patience for the market, which it will in time come into alignment with our method. So it's not like our method is meant to take advantage of every possible price movement that could ever happen. That's not what we want. We're looking for specific price patterns in alignment with multiple concepts that make sense to us. And that happened yesterday. And part of what's difficult, like if things are in a steady trend, it's a lot easier to use your method when things are trending in one direction and things are relatively easy, as opposed turning points are extremely difficult because they're whippy. So to have caught that turning point as we did, it was textbook. So anyway, we'll go over it. And I just wanted to, say that it's not always easy, and some days are easier than others. And as you do this professionally and you understand a method and how to use the concepts that we use in diverse ways, it's kind of like saying, okay, that's a wrench or a screwdriver. And it's like, what can you do with a screwdriver? It's like, well, I can take it and put it in a screw and, I can turn the screw. And someone else says, well, I can take that screwdriver and I can use it as a chisel. I can open up a bottle of beer. I can do this and do that with it. And, I think that's when you start to learn how to use your technical tools in different ways, other than just saying, hey, that's a bottoming tail bar. So I hope that analogy helps, but, it's just taking these technical concepts that we use, and someone who understands it in a very novice way, wouldn't be able to do anything with it, whereas you can take that and produce money with it. And of course, that's the goal. So let's see where things are going here. So the Dow had that big gap down, as everything else did yesterday with those earnings that came out. And things just played out, according to the plan from back here as to what I wanted it to do. Maybe the size of the gap was a little bit extreme. I probably would have been best if it was a smaller gap and it went down and it was an ugly day, and maybe today was the gap reversal day. But anyway, it had the turnaround day, and it took a little while to set up, and we got it. So now what? Now, as we went into the close yesterday, what we had was a market where the daily had a W type of a bottom, but the hourly, and this is looking at 24 hours, it's not exactly what we were looking at yesterday, but you understand because we were looking at it together, but the hourly pushes up into an area of resistance within a downtrend. So the intraday time frame is not in alignment with its message of the daily time frame. Well, the daily time frame's in a downtrend because of the nasty crack. But our market internals down here said be looking for a bottom. Now we've got the retest, we've got the gap, we've got the reversal. Okay, buyers, what are you going to do here? You've got this resistance overhead. You got some battle to deal with here. And we talked about the possibility of the market gapping lower. And right now, it's not gapping lower. It looks like it's about even, give or take, maybe up a little bit. And what are the futures doing? They're actually up a little bit. So pretty neutral versus have a gap down, which I said that would probably be a gift to buy that gap down at the appropriate time. And then after it did some work and able to establish new support in the area of this resistance, this hourly time frame can come into alignment where this starts moving up together. I said, or maybe it could gap up above this area here. Well, that's not happening. So we've got a neutral type of open here as far as the Dow goes. And we'll just see how this develops here. And we'll do our factory work as to, does it go sideways at resistance? Does it pull back? How much does it pull back? Does it push higher? How does it act when it gets to that next resistance area? So we will do some discovery work at the beginning of today to determine are buyers still going to stay in control. And historically, this pattern suggests that they will, but they're going to have a little bit of a hard time probably in the next couple of days dealing with what's to the left here. All right. Qs acted better yesterday. It did gap down big. If I remember right, it was over a 2% gap to the downside. And after that first half hour, which was like right over here, you know, where it tried to go up and it actually popped up. And the traders, and I can't say they did the wrong thing, but the traders that bought the new high, guy got slammed and it went back down again. And that's where it began to reverse. And then it pushed up throughout the whole trading day, and it barely looked back. It had little retracements, and it pushed up into the gap fill, and it ended there. And so far, we've got pretty good price action here where it was lower and buyers stepped up again. And that is suggesting that buyers want to continue. They believe that the upside here has pretty good odds, even though of the way it came down on that resistance. We'll assess that battle that's going to go on and how we can take advantage of it. Let's look at the futures. You always get a different picture when looking at the futures, but this isn't a bad picture. It's a giant bottoming tail bar. So when you get a giant bottoming tail bar like that, historically what happens is it's going to be followed by some erratic price action where the range is going to contract. I don't know what that's going to look like, right? But contract just means you're going to have a smaller range than this range. That could last for a day or two, and that would be just fine. And what we would want to see is that day or two to stay up in this range here, right? We want to see it stay up in that range. And then you pick your point. I'll be picking my point. You pick your point. If you're in the room, we'll pick points and talk about it and, decide on what to do and looking for prices to push up into that area there. So we'll see how that's going to play out. But first part is to just say, hey, you know what? I want to be objective about this, and let me have some guidelines as to where the price action should stay generally. And it should stay right where it is, right what it's doing here now, right? Chop back and forth, absorb this supply, not go down too far, come back up after the dip where buyers are there, doing just what we need you to do. It's a bit whippy, so not something that we want to get involved in, because it's too erratic just here. Anything could happen, but this pattern, right? What's happening here, right? This, and forgive me for drawing lines like this, but like, which mean absolutely nothing as far as support and resistance, but I just want to display the volatility or the range expansion that happened here and here. So that range expansion is now going to start contracting, right? And that's what we want to see, right? And as that contracts and gets tighter, our interpretation is, okay, it's going to be ready to go up. And so what about it going down? No, we don't want it to go down. The reason I don't want it to go down is because we've got this great looking W bottom developing here, and we have our market internals, which are at a bullish extreme. Now, sure, maybe, and you know what, it was a little surprising yesterday that the option traders weren't buying more puts, and I guess maybe that's why the market couldn't take off, or one of the reasons initially. But I wish this would have, they were buying more puts, and maybe if whatever little weakness, they will, step up here today and add to their future losing positions and buy some more puts, and we can get a little bit more bearish, but this is okay where it is. We'll take it. And breadth is doing what we need. I told you it probably do on a retest with a lower low, right? It's not as bad. There's some stuff out there showing relative strength, and we've got, that's the day-to-day of that put call ratio. So this is all good, right? This is all good already, and we shall see now in the coming day or two how this all unfolds to come together to put on a lot more positions. Let's get rid of this. I don't need that anymore. And I think we looked at the S&Ps. Well, we got the lower low, perfect bottoming tail, inside day here. And like a pattern that just says, you know what, just hang out, watch. Let's see how this develops here, because it has the potential to make a pretty big move. So there's no point to get into a rush and jump in there. Just give it a little bit of time. And the Dow, pretty much the same. Bonds showing a little bit of strength. They got whacked here and just kind of grinding up here a bit. So they don't think they're going to do much. Oil, that's not oil, that's gold. Oil slashed down through its 200 MA yesterday and got pretty close to the next support level. You see the 200 was in alignment with that low. And then the next one is down here. Got some big volume pop there. So, you get a retracement of this far all the way back down to the prior low. There's going to be buyers down here. Sometimes it'll overshoot it a little bit, but there's going to be buyers down here. Expect some stabilization in this area. We had, we had that. Come on. And we had it here. We had it here. So, it's an obvious spot for buyers to want to step up again. So I think that move down in crude oil that started with the breakout failure up there, it's about played out wherever it's going to do. And gold didn't have a bad day yesterday. If you forget the tail, it just went sideways and actually gained a little bit on the day. So consolidating its recent move up, no big deal going on there. And a lot of what's been smashed, primarily, home builders looking pretty good. Where are you, home builders? There we go. Not you. Yes. I don't know about looking pretty good. That's an overstatement. They had a breathing day with volume. Could be the start of a bottom there. And technology looks good. This is internet. I like that. I think Facebook, I'm going to be keeping an eye on that. I think because Facebook is down near an area of a prior low. Well, not that prior low, but it's beginning to stabilize down there. And it is on the weekly chart down here. So it makes sense for it to make a short-term move where our market internals are in alignment with that, to see Facebook try and make a little Christmas cheer after it got its beating. So that's for me, Dan. You can take it.
All righty. Good morning, everyone. Well, this is going to be a very short review of open positions because we only have two. And those were yesterday put spreads. We did spiders and